ultimately there will be a failure to deliver. I mean, you can't have 300 paper ounces outstanding for every 1 real ounce that exists, because there will be a stampede at some point, and everybody's going to compete for that one. Of the 300 contracts or 300 paper ounces are going to compete for that 1 ounce. And once that happens, it is completely game over, not just for silver. That will bleed into gold same day. And I'm going to tell you, within 48 hours, you will see a complete break in confidence of the treasury market and the dollar itself. Because understand, the suppression that we've all been so frustrated by over the years, that suppression plan was put in place so that on the one hand, they're showing you gold bad, which means on the other hand, paper good. It's been used to support the value of the dollar and support the ability of the US Treasury to borrow. And look, where are we now? I just saw an article this morning that the interest expense is now up to 800 billion per year. That's about double what it's been for the last, call it 30 years. For the last 30 years, the US was paying about between 350 and almost 500 billion per year in interest. Now, what happened was they kept piling debt on, but they were able to continually lower interest rates to keep that 350 to 500 billion range of interest per year pretty much stable. And they did it for 30 years and it worked. The problem is we got down to 0%. They couldn't go any lower. The debt continued to pile up, and now interest rates are going higher. And now we've broken out, we're up to 800 billion. We'll be over $1 trillion in interest alone. And that's just interest. And remember, the Treasury can't open the doors, October 1st, the beginning of the fiscal year, without running at least $1 trillion deficit per year. So at this point, math has caught up to the US Treasury. There's nothing to do. This is math. There's no way to avoid the math. It's over. There is no option. We are headed into hyperinflation. We are going to lose the currency, and that's where this goes. The financial system is going to go down. This is no longer Bill Holter and Andy Schectman's opinion. This is pure math. The system is going to break. It's going to go down. And the thought process of you use silver to get through the crisis, and you hold gold to carry your wealth through the crisis. My point being, the junk silver was not favored. I mean, I've spent the last 6 years, 7 years amassing, who knows, a few $100 million worth of junk silver. And it's gone. And the fact that it's gone, just think about supply and demand. I can see the day, and I don't think it's too far off, where the most expensive, the most valuable silver there is going to be junk silver. It will be the most coveted silver there is. And I mentioned this just a few minutes ago. Junk silver is the canary in the coal mine. When that's gone, and we're pretty much there now, when that's gone, that tells you that there's a huge supply and demand problem in the industry. And like Andy said, with Eagles, you pretty much can only get 23 Eagles. And this all kind of started last summer with the big trade that I did. It took $27 million to clean up pretty much every bag of junk, every half dollar, every silver dollar, and pretty much all the Eagles available. Think about that. $27 million is not even the mayonnaise on a ham sandwich compared to the overall financial industry. So if that small amount of money could wipe out the supply, what do you think is going to happen when en masse the public moves to silver, to gold? They're going to wipe the supply out. you will wake up one morning and all of a sudden, boom, there's nothing to sell. I mean, there's no product at all for people to buy. That's coming. You know, people look at prices and they're like, I just want the cheapest silver, which basically you're talking about 100-ounce bars or kilo bars, and that's fine for somebody who wants to store it, basically looking to go through this and end up with silver at the back end, but it's not usable. And I caution people, you know, if you want 100-ounce bars, understand that it's cheapest for a reason. And the reason being, it's the least utilitarian of anything. So I do try to counsel people, if I can't find junk and they don't want to pay the very high premiums of Eagles, I counsel them into purchasing 1-ounce sovereigns, and then next would be 1-ounce generic rounds. You really don't want to do bars. Now, I know you can test. I don't have the ability to test. In a system breakdown, if somebody wants to barter with me and comes to me with a bar, I wouldn't even consider it, because you can't know what you're actually getting in either silver or gold. So just understand, you know, if you're buying bars because they're the cheapest, you are buying the worst form of ownership. And that's okay if you're storing it, you know, you're doing it in huge amounts and you're storing. But if you're doing that, you know, if you can afford, say, 1,000 or 2,000 ounces, what good is a 10 or 20 100-ounce bars? What good are 1-ounce bars if they can't be assayed, if they can't be proven to be real? They're going to be discounted. So if you're cheap on the way in, you're going to get cheap on the way out. But it's math, and if you think about it, just over the last 2, 3, 4 weeks, the talk worldwide of de-dollarization has picked up speed immensely and beginning to go exponential. I mean, the latest is Brazil. Brazil is talking about no longer using the dollar for trade. This is, you've got Saudi Arabia saying that they will accept other currencies than dollars. You have countries all over the world doing deals in rubles, doing deals in yuan. And every one of these deals takes a chunk of the demand away from the dollar. And understand that for the last 30 years, well, more than that, call it almost 50 years, 51 years actually, to go back to, or 50 years to go back to 1973 when the petrodollar was first dreamed up by Kissinger. I mean, that's what saved the dollar when Nixon brought us off the gold standard, and it worked. It worked really well for many, many years. But the problem is, just like any Ponzi scheme needs new capital on a consistent basis to keep the game going. And we're at that, and we're mathematically at the end of that game. And you can see by the actions of foreigners saying that, we're not going to use the dollar, we are going to use an alternate currency. People are jumping ship left and right. And think about this, Chris. It was very interesting. About 2 weeks ago, the Kremlin came out and said, thank you to the United States for all the sanctions, because that took them off the SWIFT system, and now we don't have to worry about your banking system. All of these things, all the things we've talked about, the Saudi Arabia, Brazil, just piece by piece. I'm old enough to remember back in the 1980s, even the early 90s, if even one of these events was announced, you would have market convulsions like you can't imagine. And it's these dollar negative news events have become normalized. It's like, oh well, it doesn't matter. If you ask, and a lot of times I do ask people that don't get it, my first question will be, do you believe the United States is bankrupt? And 95% of the time, you'll hear, well, yeah, of course they're bankrupt, but it doesn't matter. And what I'm trying to get at is we have this emotional, normalization that we've been hit by so many shocking things that nothing's shocking anymore. And the reason I'm bringing this up is, in my opinion, when this thing goes, it's going to be like a 48, 72-hour event. And it will be all over. And the only thing that's going to be left is a black smoking hole of no value.